Are we in a U.S. housing bubble right now? You bet we are. Let's dive into it. Hey everybody, I'm Clayton Morris. Welcome back for another video, and today we're going to talk about the U.S. housing bubble. This channel is totally devoted to helping you build passive income, taking action, and becoming a real estate investor. The whole point of this channel is to talk about buy and hold rental real estate. That's what I do. I've rehabbed hundreds of homes, and that's what I'm hoping to help you do to take action and to build that passive income. Now, today, let's talk about the economy. Occasionally, I like to look at some of the economic news, the real estate news that's making headlines, and we have a whole playlist devoted to these subjects. So all of the current news in real estate, you can check on that and check out that playlist below in the comment thread or in the card above here. One of the things we've been following, of course, is interest rates. And we know that the Fed just raised interest rates for the first time, actually the second time since 2008, but they're still at historic lows. But the real question is why? Why are we seeing those interest rates going up, and what's happening right now in the construction sector? And the broader questions about a bubble. Now, we hear about a real estate bubble. We're probably thinking about 2008. That's the last time that we had a big real estate bubble in the United States. What is a bubble? Well, it just means that prices of houses keep going up. People are unable to basically afford those houses at a certain point, and then suddenly crash. Construction dries up. Banks don't lend. Foreclosures, short sales, people lose their jobs, economic collapse. That's a bubble, right? We saw that with the tech boom. Remember the tech boom in the early 2000s? When that happened, that was a total disaster. You remember what happened, right? You had all these companies that were sort of artificially inflated on nothing. Remember pets.com, that ridiculous sock puppet? Yeah, you had these companies that were being inflated with all of this money, this venture capital money, and yet no one was buying pet food online, and no one was actually shopping at pets.com. So what's happening here is that in the housing market, what we were worried about before, a decade ago, was people artificially inflated prices and values, but no one being able to pay their mortgage, right? Because they were out of a job, or they actually shouldn't have qualified for the mortgage in the first place. But what's different this time around, and why it's less scary this time around, is that yes, we are seeing prices being driven up, but they're being driven up by a lack of supply. A couple of things are occurring here is that the home builders aren't building at the level that they were building before 2008. And actually, if you've seen some of the other news we've been following here, is that builders are actually slowing down a little bit. And construction starts, is what they called, they actually hit their first break and low point in about 4 years. So what does that mean for us as rental investors? I always try to look at the news in the terms of, hey, I'm a rental investor. What does that mean for me? Not as what does that mean for me as John and Susie home buyer, because I'm going to live in this particular property. I look at it this way: if builders aren't building new rental properties, they're not building new single-family homes, well, that's great for me, because that means that there's more, there's more opportunity for renters to rent from me. Also means there's less homes out there, and that means the vacancy rate won't be so high. So I think without that extra inventory, we see a lower vacancy rate, we see more competition for people to rent from me, which is exciting. So over the summer, we saw 50 consecutive months of appreciation and growth in the housing sector, which was great. But what that means is you're also seeing increased prices on homes and interest rates at historic lows. So that means that people wanted to get out there and try to buy a house. The problem is that there's just not a lot of houses and not a lot of availability. So now what happens when you have this rate increase that we just saw last week? Well, what we can see is we can actually see people who are less likely to go and buy a house, right? Because now the interest rate goes up a little bit and they're saying, well, maybe we'll just wait. maybe we'll wait, maybe in a few years, maybe we'll buy that house. The interest rate is a little bit higher now, and we just don't want to buy. That could cause this bubble to come bursting a little bit. It's not as scary this time, though, because it's actually rooted in some good economics, right? If I can't afford to buy the house, maybe I shouldn't buy the house. In 2008, it was, I can't afford to buy the house, but the bank is letting me do it somehow. They're even giving me 110% financing to buy the house. So this time I look at the housing bubble as not as scary and not as threatening. Again, so we're seeing these interest rate increases, but we're also seeing construction drying up just a little bit, and we're seeing a lack of inventory. That's why we're seeing home prices higher. It just really comes down to supply and demand. So we here at the channel are going to be keeping our eye on construction. I want to see what's going to be happening in the construction sector. I want to see if new apartments are being built, if new single-family homes are being built over the next year to 2 years. And then we'll start to maybe see some moderation in those prices. But folks, I'm telling you, for the foreseeable future, you know, we're doing great. We're doing really great. And again, as a rental investor, without new apartments being built and the types of homes that I buy, those 3-bedroom, 1-bath, we know that builders simply aren't even building those anyway. Like, if they're going to get back and start producing again, they're just not building 3-bedroom, 1-bath houses. Why? I have a whole video on that, but I'll explain it shorthand. It's because millennials aren't buying those 3-bedroom, 1-bath starter homes anymore. They're skipping and waiting till they're in their 30s and 40s, and they're buying the 4- and 5-bedroom houses. So builders just simply aren't building them. Well, guess what? People still need to rent, and there are plenty of single moms out there, single dads out there, grandmas that want to live in a 3-bedroom house. Great. They're going to rent from me and you. That's the key, right? Dig it. All right, so that's a look at the U.S. housing bubble. Yes, we are sitting in a bit of a bubble in some of those coastal areas like San Francisco and Miami and Chicago and Texas and New York and other areas like that. But again, it's being driven by some sound fundamental economics, which looks like it's tied to that rising interest rate could slow it down a little bit, but also the lack of supply of these houses. That's why we're seeing this push up in prices. So there you go, folks. I'd love to hear your take on this. You can leave some comments in the thread below. You know that I always answer them, and I'd love to answer your questions and take a look at what you guys are thinking about this. You can also subscribe to the channel if you haven't already done that. Boom. Click the subscribe button. And you can also click on some different playlists over here as well. You can check out all the stuff that we do here on the channel on a regular basis. The goal, once again, we want you to go out there, take action, and become a real estate investor. Everyone, we'll see you next time.